Hello dear students, welcome back to our channel Bhavani Commerce Academy. In the last class, we discussed depreciation, calculation of depreciation on straight line method. Yes. So here today's class is same straight line method. How to prepare plant account by using straight line method here we are discussing. Let's start our question. Arun purchased a plant 1 lakh on January 1st, 2006. Depreciation is to be provided annually 10% on original cost every year. Scrap value of plant 10,000. The books are closed on 31st December. Prepare plant account and depreciation account for the first 3 years. Okay. Here given percentage of depreciation. So no need to find out the percentage. What we should do? We need to find out depreciation by using this percentage. So here we have formula. If percentage is given, depreciation is equals to original cost minus scrap value into percentage. This formula is applicable when percentage is given. So depreciation is equals to original cost minus scrap value into percentage. Okay. So what is the original cost of the plant? 1 lakh minus scrap value of plant 10,000 into what is the percentage of depreciation? 10%. So 1 lakh minus 10,000, 90,000 into 10%. 90,000 into 10% how much? 9,000. So what is this 9,000? Depreciation. So this depreciation we are charging while preparing plant account. Okay. So it is a plant account we are preparing now by using the depreciation. Okay. So in the plant account debit side we have date particulars amount column and credit side also we have date particulars amount column. Okay. See how to prepare this plant account. So in the question Arun purchased plant. When you purchasing plant is coming into the firm. One asset is coming into the firm and cash is going out. So one asset is going out. That means plant what comes in debit, what goes out credit. So plant debit, cash credit. Okay. So what is the entry? Plant account debit to cash account. Plant account debit to cash account. When you are preparing plant account is debit. Yes. Debit side what we should write? To cash. Plant account debit side we should write to cash. So what is the date? On January 1st, 2006. So 2006 Jan 1st. Okay. So what is the value? 1 lakh. Okay. So after writing this, here given depreciation is to be provided annually 10% on original cost every year. So already we calculated depreciation. Yes, 9,000. Original cost minus scrap value. If you have scrap value, deduct that value. Otherwise, no need to deduct. And if you have installation charges, that should be added. If it is scrap, that should be deducted when you are calculating depreciation. Remember it. Okay. And so when you are providing depreciation, what is the entry? Depreciation means decrease the value of asset. So asset is decreased. One asset is decreased means that should be credit. And depreciation is a loss. All expenses losses debit. So when you are having depreciation on asset, the entry will be depreciation account debit to asset account. Here asset is plant. So plant account. Okay. So here we are preparing plant account. It is in credit side. So that credit side what we should write? By depreciation. Okay. So by depreciation. Okay. So what is the value of depreciation? 9,000. So depreciation is calculated on end of the accounting period. What is the end of the year? 31st December. December 31st. Okay. After writing depreciation, you need to do the balance. Which side is more? Debit is more. 1 lakh, 1 lakh minus 9,000. That is 91,000. What is this 91,000? Balance carry down. So, balance carry down. What is the date here? December 31st. End of the year we are writing here. So, this is carried to next year. So, what is the next year after 2006? 2007. 2007 Jan 1st. Okay, here 31st December means that is transferred to next year starting month, January 1st. What we should write here? To balance brought down. Okay, what is the value? 91,000. After writing total only we are taking this value. Remember it. Okay, so after that, again we need to provide depreciation. Because he are asking depreciation, prepare plant account and depreciation account for the first 3 years. For 3 years, you need to provide the depreciation. Okay, so here I'm writing same depreciation. Okay, and which method it is? Straight line method. If it is straight line method, a depreciation amount is fixed for all years. Okay, so I'm taking here 9,000. Same value. So then again, do the balance. So 91,000 minus 9,000. How much? 82,000. So what is this? By balance carry down. December 31st, 2007. This is 2006. Okay. And third year. What is the third year? 2008. Jan 1st. To balance. This balance you need to write again here. To balance brought down 82,000. Okay. Again we are providing depreciation for the year 2008. December 31st. By depreciation. What is the amount of depreciation? 9,000 because it is straight line method. So if it is straight line method, amount will not change. Again do balance 82,000. 82,000 minus 9,000. How much now? After deducting 9,000, your amount will be 73,000. See here. 82,000 minus 9,000. 73,000. What is this 73,000? By balance carry down. December 31st. That should be to balance brought down 73,000 for the year 2009 Jan 1st. Okay. So this is the preparation of plant account under straight line method. Okay. And here asking depreciation account also. So if you prepare plant account, depreciation account is very easy. సో మీరు ప్లాంట్ అకౌంట్ ప్రిపేర్ చేశారు కాబట్టి డెప్రిసియేషన్ చేయడం చాలా ఈజీ. ఎలా అంటే సో ఇన్ ప్లాంట్ అకౌంట్ డెప్రిసియేషన్ ఈస్ క్రెడిటెడ్. ఎస్, 3 times it is credited. If you are preparing depreciation account, plant account is debited in the depreciation account. How many times? 3 times. Let's see. So this is the depreciation account. So what is the entry here? Depreciation account debit to plant account. Depreciation account debit to plant account. When you are providing depreciation, the entry will be depreciation account debit to plant account. So here we are preparing depreciation account. Depreciation is debit side. So debit side what we should write? To plant. To plant. See here. For the first year, depreciation 9,000. If you are preparing depreciation account, you need to write plant. Opposite aspect you need to write. So already we wrote here to plant. What is the value? 9,000. Okay. What is the date? 2006 January 1st. Okay. So after providing depreciation, Do balance 9,000. Here also 9,000 because there is no credit side amount. Okay, so if you have any amount that will be deducted from the 9,000, but there is no amount. So what we should write here, 2006 December 31st by profit and loss account, because this amount is goes to profit and loss account. And next 2007 Jan 1st. Again here we have depreciation. Yes. So if you are preparing depreciation, what we should write? Plant. To plant. What is the amount? 9,000. For the second year also depreciation is 9,000 because it is straight line basis. Total 9,000. Here also 9,000 and there is no credit side amount. So the amount is goes to profit and loss account. Very easy to calculate. Yes. 2007 December 31st. This is the starting date and this is the ending date. See. So what is the amount here? Balance amount 9,000. Next 2008 Jan 1st to plant. What is the third year depreciation? 9,000 only. So again do the balance. Our balancing figure will be 9,000 only by profit and loss account. It is also balancing figure only. Okay. So what is the year here? 2008 December 31st. Okay. So this is the depreciation account. Okay. If you understood, like my video, share to your friends and subscribe my channel.